What's up, guys? How's everybody doing? We'll get started in a minute. Let me just rearrange this so we could chat, but have the tapes blown up a little bit more. Ooh, that's not good. Never mind. Leave it like that. What's up? How's everybody doing? Give me a sound check. It is a beautiful Thursday afternoon, coming at you at 3:30 p.m. Eastern Standard Time. I don't know what's up with the radio voice right now. That whole like cadence that radio people speak in. Apologies for that. Let's keep it natural. Just give me a sound check, and then we'll be good to go. What's up, Cornholio? What's up, Chris? Asgard, what's up? Nick, BK, sounds good. All right. So yeah, today I had to change time again. I'm gonna be again, like I said yesterday on Twitter, and I said in the stream prior. The plan was to do, so first and foremost, thank you guys for hopping on. If you haven't already hit the like button, go ahead and hit the like button. If you are not a subscriber, make sure you subscribe. I'm going to touch on a few things in the beginning of the stream. This is going to be kind of an open-ended stream. We're going to take a lot of questions, ideally, be able to answer a lot of questions, ideally. Talk about prices, right? Obviously, everyone is interested in where BTC is going. And touch on some things that I think are relevant and funny, especially with the Blockfi news. But we'll get into that in a second. So, real quick, obviously none of this is financial advice, strictly for entertainment purposes only. With all of the things that are taking place right now across the market and the fear with respect to exchanges, I can tell you guys that when it comes to Phemex, the first thing I did when the market was going through this stressful period was get in contact with the team, get a real feel for what the health of the exchange was, make sure the exchange is still healthy, obviously, because there's a lot of rumors going around about every exchange. And I can tell you that Phemex had no money lent out. They didn't lend out any of their assets under management. They their whole agenda early on was to have slow natural growth. They were hesitant to list a lot of things that a lot of other exchanges did. They were slower to list certain pairs. They did more due diligence when it came to that. And they also, they're not like FTX listing everything that you could think of to trade. So I can say that I'm confident that Phemex is a safe exchange to use. So the link is below, Phemex.trade. And I appreciate the team, obviously, for always being very responsive and very helpful. Anyway, real quick announcement. I've been doing call-ins for the last 6 months now. So call-in's a great app. But I will no longer be doing call-in. I'm going to be doing Twitter Spaces from now on. So I'm going to be on Twitter Spaces, ideally the same amount of time that I was on call-in, right? So 3 days a week. And we will do Tuesdays, we'll do Thursdays, and we'll do Sundays. So this might be a little redundant for those of you that were on the last call in or on the last stream, but that's the plan. Tuesdays, Thursdays, and Sundays, I'm gonna host Twitter Spaces. And honestly, now that I'm not with Colin anymore, I think Twitter Spaces are superior. I know, listen, when you're partnering with a company, you don't want to talk up about the competitors, but Twitter is so much easier to use, right? We're all on Twitter. You guys access me. Majority of you access me through Twitter. So, now that I'm no longer going to be using their platform, again, wish them all the best. But it is way easier to host them through Twitter Spaces. There's less, hoops to jump through. Everyone's already on Twitter. I think it's a lot easier. And also when it comes to having more of an interactive type of, session, I think Spaces does a better job. I mean, Colin is more of a podcast. I'm not a podcast, so I wasn't putting together guests to come on. I already said well into the beginning, I have no interest in doing that. I just want to, talk market color, and that's really it. I don't want to be a podcaster. There's some phenomenal crypto podcasters out there. Don't get me wrong. Respect for, people like Luke Martin. I used to listen to a few up onlys, even though they're like a little bit goofy. There's a couple other podcasts that they don't immediately come to mind, but there's some great podcasts out there. And the thing is, like, you've heard about everybody's story already. If you've listened to one podcast and you listen to a guest on one podcast, odds are like that guest has made the round on other podcasts as well. I don't know. It's kind of boring. I have no interest in becoming a podcaster. So I think Spaces will be a great thing to host. And again, it's easier to let people join in. I'm sure it's going to be a little bit. It's going to require a little bit more of a me being a doorman almost, and making sure there's no riffraff. But we'll get it done, right? So starting next Tuesday. So not this Sunday because we got holiday weekend. It doesn't make sense. 4th of July is on Monday. So starting this upcoming Tuesday, I'll host my first Spaces, and hopefully we'll pack them out. And we won't. The problem with Twitter Spaces is they're CT, right? CT. I have a very hard time believing that the demographic in CT is what it seems to be sometimes when people have polls. If it is, then there's a lot of immature people on CT. You do some polls, you get some feedback when it comes to everyone's age, and sometimes I'm blown away. I'm like, wait, most of the people here are like in their 30s, and some of them are in their 40s. Like, doesn't seem that way. So Twitter Spaces have a tendency to drift more towards, like, again, riffraff and like childlike behavior and no real direction, no structure, or there's a lot of NFT spaces, and I couldn't really tell you. I'm talking specifically crypto. I'm sure there's a bunch of incredible spaces out there that have nothing to do with the subject matter we're talking about. But I haven't found really good spaces. There's a couple of spaces that they do talk about technicals, but I feel like every spaces it's like bulls versus bears arguing, and it's they touch on a few points like markets are oversold, funding is really negative. Thanks, that's all, folks. That's all we have to say about that. 8 hours of goblin sounds. I tuned into one of those for like 5 minutes. Yeah, so that's a really great example. So anyway, that's the plan moving forward. I'll be hosting Twitter Spaces, and again, Tuesdays, Thursdays, Sundays. This Tuesday, I'll have a time listed by the end of this weekend, and hopefully you guys can join. And they will be they'll be recorded, so that's great too. So they'll be recorded, they'll be archived. It won't be won't be the most organized way, because obviously it's not the same as call-in. I don't think. I've never really explored the Twitter Spaces from a creator standpoint or the person who hosts it. I don't know if it has like a page with all your spaces archived. We'll figure it out, right? So yeah, pretty much on the same schedule. They get more traffic. So yeah, and I feel like some people just didn't want to use the call-in too, which is like, some call-ins would have 200 people, some call-ins would have like 30 people. Yeah, CT is kind of sour these days. Yeah, it is. Like, I don't know. A lot of people have kind of round-trip their net worths. So that always sucks. And, we're right at like the bleeding edge and right at, the ground floor with most of the people in this market. Being on Twitter, you're interacting with people that trade this market, that invest in this market on a day-to-day basis. Like, you're going to get to know their temperaments and see how they shift over time. And that's just the general state of the market right now. I'm in a fantastic mood. I hate to say I'm in a fantastic mood because I made the right decisions, but you too can be in a great mood because ideally you'll correct your mistakes and won't make the same ones again in the future. And you'll have plenty of times to do this over and over again. So if I could start this stream on a positive note, it'll be that this is not the last cycle. This is not the second to last cycle. This is just a market that now is maturing. And it's going to go through the same market cycles that every market goes through. This market is a lot more immature. There's a lot less of a filter for things to get listed, for projects to be created and immediately traded and invested in. So what that allows for is a lot of garbage. But as this market becomes more regulated, as it becomes more mainstream, it's gonna be the same thing as any other market. You'll have things that have been like the bellwether and the blue chips over time, but there'll be a lot of garbage and things that pump in the future, and nothing's gonna really change. The only things that you could assume are probably gonna change moving forward, because we are gonna step through this doorway when it comes to regulation, where it's suddenly you're not gonna have pairs that have like built-in pumponomics, right? Tokenomics that make them very reflexive and almost like up only for a period of time. There were things in crypto that were basically like, let's be honest, like they're structured to go up for anyone who got involved relatively early. Whereas, like, yes, of course, if you get involved in things that are early, if you're early into something that becomes popular, yeah, that's how it works, right? You make money. But there are things in crypto that were basically just Ponzi schemes, right? Total grifts from the start. And yeah, you'll have less of those. But like I said on Twitter the other day, people aren't changing. This is still a casino, right? I know people like to talk about the equity markets and other markets with a much more lofty sense of sophistication. Of course, yes, right? There's things to be said that differentiate crypto from the equity markets. But at the end of the day, it's human behavior that makes these things go up and down, right? Human behavior that makes these things go up and down, the things that we say that we value, current norms, current zeitgeist, our culture, what we appreciate. It's still, at the end of the day, it all comes from this wetware between our ears, right? So as long as that doesn't change, and you're guaranteed that that's probably not going to change for another 100, 200 years, and that's generous, right? As long as that doesn't change, animal spirits in markets will still be there. Momentum will still exist. You'll still have big bubbles in the future to take advantage of. That being said, got a few things out of the way. We're going to talk about BTC. I took 2 trades this morning, and then I went to the store to buy a bunch of different t-shirts because I asked on Twitter. I said, hey, anyone have any good t-shirt recommendations? Just because I blow through them. I don't care who makes it. I am a little bit larger than your standard person. Maybe I don't even know how to take a t-shirt off. Maybe that's the problem. I take a t-shirt off. I do that like 5 times, and the neck is worn, and it doesn't have the same structural integrity that it did in the beginning. So I'm sampling t-shirts. I threw a bunch in the dryer. I like to have a little bit of a shrink. I don't know, off the rack they never fit as maybe it's, who knows, maybe it's after a first wash, everything feels good. We'll talk about prices, but really quickly I want to touch on something, and I don't want to go too much into the macro because I like to stay in my lane. I probably know more than 99.9% of CT when it comes to macro, but I don't know even close to what someone like Ian Shepherdson knows, or any kind of major macro trader. That's not me. So first things I like to point out, though, it's good when we have commodities going down, right? So oil being down in the day significantly, that's great. The dollar being down significantly, that's great. More telling than anything else is the 2-year and the 10-year now being below 3%. So this is a sign of actual panic in the market. That recession narrative is now becoming very, very real. And it's almost like no use even referring to it as a narrative. It's becoming like palpable at this point. So the 2-year and the 10-year, the yields coming down, right? Bonds being bid, that's a sign of the market actually panicking as equities are moving down, right? So locking in that yield. So this is a good sign. One thing that Ian Shepherdson talked about, and this is probably the best person that you could follow when it comes to macro, and someone who pointed him out to me is someone who I really lean on and talk to frequently, and that's Oxham's. So 0x, right? HAMZ, ex-Goldman guy. Just a great person on CT, wealth of knowledge, not like really most other people on CT. Not a total goof, right? You could learn a lot from him. So he was the one who introduced me to Ian. And this morning he posted wholesale gasoline prices now down 70 cents per gallon since the June 9th peak. So this is a real, this is actually a tangible measure of possibly the inflation peaking narrative actually having some merit, right? So retail following with the usual lag, expecting, more importantly, right? Expecting, more importantly, that CPI, headline CPI and PCE prints in July forward are lower. So that would be great. That would be absolutely fantastic. You know, if we could start to see the signs that rate hikes and QT are actually having an effect on, you know, inflation, that'd be great. What this means is essentially it's the signs that come along when you have an economy going into a recession, right? You're going to see that people aren't able to consume as much as they have in the past. They're going to be tighter with their wallets, right? Credit's going to shrink. But you know how we interpret it. I mean, obviously, this is not a good thing. This is kind of a good sign for at least for risk, right? With where we are. I'm going to change the screen now so we could actually take a look at some charts. Let's talk about another thing real quick. What do we have? So FTX closes in on a deal to buy BlockFi, right? I have no dog in this, right? I couldn't tell you anything about BlockFi's balance sheet or, you know, their practice aside from, you know, arbing the GBTC premium. Obviously, that's not something that was going to persist, that you could build a business around. So the craziest thing about this is the headline is FTX closes in on a deal to buy embattled crypto lender BlockFi for $25 million in a fire sale. It's a fire sale, right? $25 million. That, I think that is 99.9% down from what their original valuation was, right? So this is pennies on the dollar for FTX to pick them up. You know, listen, 3AC absolutely destroyed every person that they had a relationship with. You know, borrowing, what was it, $1 billion from BlockFi? Celsius, sorry. You know, FTX looked at Celsius, took one look and was like, fuck that, dude, you're hopeless right now. You're dead on the rocks. But this is like, this is egregiously low. And it's not egregious, right? Because that implies that I'm saying like BlockFi is worth more than that. But this is like buying an altcoin, right? This is like FTX living what we preach. You know, don't buy alts until they're down at least 99%, or at least like at that point, 99% buy bag, right? Just throw it away. You know, maybe it goes down and drops a tremendous amount, but throw some money at it, because at that point, like, how bad can you get? You know, someone who talked about it yesterday. This is actually a great argument for BTC when it comes to actual structural drawdowns. You know, Brent Donnelly, someone I always really respected. You know, he started off as one of my favorite authors as far as trading books go. He wrote 2 books. I'm pretty sure it's only 2. You know, it's really tough reading trading books because there's a lot of snake oil out there. And then you have a lot of people that say, like, you know, why would a trader write a book? Like, why do they need the money? It's the dumbest argument for us. Like, all that bullshit is such immature thinking. And you'll only realize that's really stupid when you're actually older and you have a mortgage and you have, you know, I have kids on the way, or a kid right now on the way. But you have like bills, like, and why would you, like, some people trade and they only make, and this is crazy to say this, there are traders that sometimes make $100,000 a year and they make a living trading. Like, are they not supposed to try to pick up more income somewhere? Either way, like, people who say that like traders shouldn't have other income streams, absolutely redacted thinking. So anyway, Donnelly is an incredible author. He's an incredible writer. He has a great newsletter. He's been on top of the ball when it comes to BTC, more than anyone else in CT. Explainer. Dude, I didn't grow up in the Hamptons. I grew up like 50 miles from the Hamptons in a, what do they call that? The 2-story houses built on Long Island, like a 2,000 square foot house. But that's probably too much, honestly. But yeah, I'm going to look at the charts in a second. But if I could boot you, I totally would. So should I put you in a timeout or should I remove you? We'll let you live. This has to do with price. One thing that Donnelly was talking about is like reflexive activity that you can get away with. One of them being like a day when the VIX spikes, VIX doubling, you know, signifying a good opportunity to buy the dip. This not necessarily working in every regime. Why would Dahlia write a book? We were talking about this yesterday in a chat, and the guy who I was talking about, Oxhams, he was talking about people who write books, people who write newsletters. It's about thought leadership at that point. It's not necessarily about like them trying to give you great trading ideas. They're making another name for themselves. It's a less stressful way to make money, honestly. If you trade for 20 plus years, you want to do something else. You want to be a carpenter at that point. So one thing he talked about was bubbles and historic drawdowns and bubbles. And BTC is like, there's some merit to saying we are, right now we've already tripped around 75% off the highs. Like a buy down of like 10% lower within this region of market structure, if this comes, right? Prior levels, 12K, 13K. I'm not saying that I'm not calling for these prices right now. If we continue to move lower and we can't hold these current lows, then yeah, chances are that's where we're going. You guys know that I only really deal with like the first levels in front of my face. But at that point, like, how bad can things get for BTC? You're back at what has been a historic drawdown level. You're close within it, at a really nice area of market structure. And it's not very likely that we're going to see the behavior by the Fed really persist as maybe the futures market is pricing in when it comes to like 2024, seeing them pull off. I think it's more than likely we see that they pull off before then. So my opinion is that we bottom by the end of this year, put in the bottom tick, and then the process goes into the second quarter of 2023. So what that might mean is it looks like this, right? Let me just change the, that might mean it looks like this, right? And then by 2023, and then into the second quarter, we could just be doing this. And I'm just going to draw this for, just the sake of being extreme, but we could just continue to range into that. What I'm thinking is either way, that we've done something more along the lines of this, right? We have a positive drift by the second quarter of 2013 and that the bottom's in. That's like my guess, right? Am I going to sit here in position on behalf of that thought? No. That's just my opinion as to how this might unfold. And it's a pretty strong opinion, honestly. So let's take a look at, you can't stop me from watching. James, why did I block you, dude? When did I block you? If you give me your Twitter handle, I think your name sounds familiar. If you were being a dickhead at some point, I probably blocked you. I go through these like phases where sometimes I'm willing to just not block people, and then sometimes it's like, dude, you got 140,000 followers, and if you have people hating on you, why would you even bother with them? It says more about the person who's saying something to you, who watches your shit, comes on your wall, reads your stuff, and then hates on you. It's like, that's a sad person, honestly. Not saying that's you, but that's the state of people when they come on hate on other people. People never hate down, by the way. Like when you see people hating, they're never hating on people below them. You're always hating on people above you. I mean, Andre, and then we'll get into the charts. Would you want to learn from a trader who only brings in 100K a year? I think a person who brings in 100K a year has something to teach someone who makes nothing, right? Because there's less than 1% of people that probably can do that. Oh, you're the guy who said, because my parents are rich and I don't have to provide for them, they're multimillionaires, bro. Yeah, I don't care, dude. That's like weird that you say something like that on a chat. Like, they're multimillionaires, bro. Like, no one gives a shit. So maybe that's like, maybe there's something about the way you communicate that's like, you don't pick up that that's kind of awkward to say. And I'm not trying to think of you being rude to them. I'm just saying, like, the way you say that, I don't know. There's ways to say things. There's certain things not to say. And maybe it's because I hate the word bro. But anyway, let's get into it. Charts this morning, shorts. Looking at TPO first. So before we ended up putting in this tail right here. So you guys can see this, right? Because I'm on Exo's desktop. Before we started putting in this tail, this profile was pretty blunt. How do we expand this? I mean, anyone in the chat right now who reads that sentence you wrote, James, thinks that's kind of awkward. So anyway, before we spilled lower, we didn't even have a good low yet, right? We didn't have a good low. ETH looked a little bit uglier And all I was looking at was basically continuation at this point, right? This is where we were back here, and I shorted ETH and BTC. So it's not like I had a glorious short from the highs, right? I just shorted the first pullback. And the idea was we were just going to take out these lows, right? If you look at this low on, and this is before the TPO was completely formed, poor low, right? This is the first pullback after an impulsive move, right? So this is the first level to start looking to fade. And the idea would be to just look at this as the initial target. The long is probably the thing that was something that was a little bit more confusing for people, because someone on my Twitter had said something along the lines of like, when did you long or why did you long? I can't remember exactly what it was, but that was this right here. So looking at this low, I'll use the TradingView tools. So here's the low initially that we're cleaning up. So there's your cleanup right down here. Here's your excess, and here's your little flip. So you have a little support and resistance flip, but it's just enough to see that there were sellers that came in right there and got stuffed. So if we back it up and we zoom in, this is the concept of sold and hold that I talk about. So this is you on the way back up. This is selling and this region holding, right? So on the lows more specifically first, you have a couple zero prints at the low. So your zero prints mean that your bid never followed, right? You had market makers step off, you had spreads blow out slightly. I wouldn't say it's a spread blowout. But then you just have this stair stepping and the selling that's coming in, right? Selling coming in volume, now price is higher, more selling coming in, and the levels are just consistently holding. So that's all you're really looking for in a short-term play. You're looking for the level to hold, right? Buyers or sellers to do their job, absorption to take place, and then tag on the position, put your stop, and say your prayers. The trade I cut early because we never got the visit to the target that I was looking at. So originally the target was originally the target was right around 914. The idea was I thought we were going to get a blow through this VWAP. Normally you have long from here, I posted the my entry and the take profit. I had a take profit somewhere up here, and the idea was you normally you don't struggle at VWAP. You might struggle at VWAP, but you'll have some kind of motion through VWAP before ultimately seeing absorption and either breakdown or possibly seeing this level hold and then continuation. So we never got that, so I needed to sell this before we ended up round tripping. But right now, it's not like there's really any significant target that's nearby. We're just beginning to start rotating again. We had a big impulsive move out. So this is, there's single prints up here. So if you look at the profile, there's single prints there. And those could absolutely come back into play. But I don't know if I'd necessarily look at this immediately and say, oh, this is a target for longs off of these lows, because this is kind of a breakaway gap from what was a multi-day period of balance. So if you get here, you're lucky, right? If we get back up there, at least in the short term, you're lucky. But it's the first area that you would look to fade. So the first area at sort of the threshold of these single prints and where the distribution starts to pick up, this is an area where you would see things kind of get cut off. Now, if you accept it in here, yeah, you could assume there might be some unchallenged shorts within here. So when you start to accept back within a double distribution like this, there's usually not a whole lot that stands in the way between, point A and point B being the top. But you do have this small piece of structure that does separate those two periods of single prints. I wouldn't say that would really stand to mean much, honestly, if we did get back above and start holding like 19.5. So if you get back above 19.5 and you start holding within this gap, right, it's more than likely that you cover that gap and we retest the underside of like 20K. And really what you would look for is a move to happen honestly pretty quickly. And at this level, you would look for basically the same behavior that I was looking for in that little support and resistance flip. So let's say, that's the level. Here's the single print. Let's say that this is the distribution. What you're looking for is an immediate sold and hold, right? And this is a sign of absorption overall. The last thing you would want to see is like you get a move, and just to reference something that's close by, the last thing you would want to see is that you get a move into the level, something like this, and then price begins to fade off and retake prior lows into that. So, you get something where you poked into the singles, let's say we ran those singles, and then you trapped a bunch of activity up here, and now price is trading back below, back within the profile. At that point, you have a pretty decently defined short setup, because you could say, you know, within these singles, back here is a good stop. The breakdown here is proof in the pudding that this is going to lead to continuation, or rather that this level is strong and holding, and you're at least looking at a short-term move back to the POC, and more than likely, you know, you revisit the low of this range. But what we could be doing right now is developing another, you know, very small range. I don't know any kind of much lower levels that are that significant. You know, we're still within this high time frame structure. So going back to, this is going back to the middle of June. And we're doing what we talked about around this time after we made this low. So after we made this low, the one thing that I kept repeating, and this is not something that I was just saying, right? This is something that a lot of people were saying, is that you just don't, we don't have it right now to leave a low, without being revisited. To leave a low without being revisited. We don't have any fuel. We don't have any kind of catalyst for a V-shaped reversal. It's only negative news right now. So it's more than likely that any kind of low that gets established takes time to develop, right? You have multiple revisits of that section, multiple revisits of that area rather. You know, from a market structure standpoint, or at least a, TPO standpoint, we are back below a prior POC. So this didn't really do shit. We have right here you have a ledge, right? So we have a pretty ugly profile down there, and then you have your lows. So if we break down further from here, the first area that I would look to is honestly like this 18, we'll say 18,245, 18K region. So maybe you end up getting something that breaks down, and then we have another trap set up there. I would look for the long opportunities here. At this point, shorting at the lows doesn't really make a whole lot of sense, because it's possible that we are right now developing another period of sort of something like this, right? Or another period where we do something like this. And it just happens to be that the closer we are to the lows, it's obvious that the risk reward there is not really that attractive. Shorting for a breakdown, rather, it doesn't seem like the most prudent thing to do. Does anyone have any questions? Before the breakdown, this is going to be kind of an open stream, so it'd be good if you guys had questions, because I'll just answer a bunch of questions, because I'm pretty inactive right now. Unless we have something that throws back above to 19.5, or unless we get to move down lower, I'm going to enjoy my day. Above us, I'll show you something that was pretty clear. This is right here. This is, one sec, let me go down to the 5 minute. This is a really tight range, right? Very tightly defined, very clean. A few people saying that the trading conditions right now are different. What'd you do? Just wake up? I think the dog just had a dream and woke up. Got a big cone on her head. Conditions are different right now. They might not be the healthiest. They might not be, it's not even a might, right? It's liquidity we have less liquidity. Things are thinner overall. There's more PvP sort of, sort of poachy behavior. But this structure it's telling no lies right now. The lows are very obvious. The highs are very obvious. The one thing that really stood out, and the same thing was happening back here, is that you had a pretty significant delta divergence. And it doesn't make sense to fade any delta divergence right now that's bearish, because what we've seen is the trend is just really strong to the downside. So price action, if we look at this, we'll spread this out so it fits in the entire screen. Open interest for that period, flat to going up. And if you look at your price action from here, let me change the ink color. Well, I'll just use the drawing tools, the native coinalized drawing tools, and then here. And look at what CVD is doing. So that is your perp CVD. That's your spot CVD. Right, so more specifically right in this region, look at that insane divergence you have. Right? So that stands out like a sore thumb. And what that looks like is, especially when you have a spot divergence like that, it looks like there's someone just limit chasing and selling into this. And I didn't end up breaking it down to see whether or not it was like Coinbase or FTX. But when you have something like that, it's not something that's worth fading in these conditions, right? We know that there are still, as I've said, in the last few streams, there are quote unquote bodies that have yet to float to the surface, or there are possibly bodies that have yet to float to the surface. You have people that are looking to get out of this market for anything that they can. And maybe it's because of other commitments they have where they have to pay back. Again, they have to pay back lenders, for example. Something like this that stands out, if you're not going to get short, you at least better get flat, right? And what ended up happening was price ended up having this kind of pop up. It almost seems like they just let it go, right? So that they could sell into higher prices up here. Because the same thing just took over right away, right? If we look at what happened to my spot CV here, hold on. How do I move this? Is that like independent or something? Can I not move that? Same thing basically happened right at the high. So between this high and spot CVD continuing. So it just shows that any kind of buying is being sat on right away. Same thing down here too. So as price, I keep using the fucking screen drawing tool. As price is continuing down, you still have that same aggressiveness that it's not tracking price in terms of the activity in price and the activity in the CVD. So this is not a good sign, right? This is like, there are larger participants that, again, are the heavier hand that are trying to get out of position either through iceberging or limit chasing and are just completely absorbing any kind of buying activity. And that only happened, a few $1,000s from where we are right now, right? So keep that in mind. The sense of urgency to get out of position, right, or to sit on it, that was at 21 or 20,150, and right now we're just over $1,000 below that. Let me just look at the chat real quick. Clean some of this up first. Hold on one sec. I'm just going through the chat. No, James, sorry, man. I don't, it sounds like you kind of care about that stuff. So there's nothing wrong with that. It sounds like you're proud of it and you're proud of, the things that you're doing, and there's nothing wrong with that at all. Some people just you have to, I think we all have to remember, all of us kind of communicate differently, right? We speak in different tones. Some of us come from different, completely different languages as a first language. Not saying that's you, James, but it's not uncommon. People prioritize things differently than others. Do you think crypto could be at the end of the 10-year run-up like tech at the end of the night? Not necessarily, because tech was already kind of more or less, the financial system, tech stocks, it was already integrated with the stock market, whereas crypto is just becoming more integrated in mainstream markets, or markets that have been around for longer. I just think crypto's following traditional markets now. I wouldn't overthink it. It's just beta. Coinboss. So on depending on what footprint you're looking at, you have to get an idea of what is size. If I'm looking at something like a 3-minute candle or a 5-minute candle, it's not like I'm looking for much. I'm just looking for volume to come into the level and for it to remain bid. The opposite would be the case if we were looking at a short term or a lower time frame support and resistance flip at the highs, and I'm looking just at buyers getting stuffed. It doesn't have to be too much volume. like right here, you have a little bit over 11 million, 12 million contracts traded, 32 million overall. But we're talking specifically at the bid. It's just showing that the level's holding pretty cleanly. It's not like it's a tremendous amount of volume. It's like Binance does a ton of volume. So when it comes to volume that stands out in the footprint, standout volume like large imbalances, you really want to see that takes place at the beginning of moves, at the beginning of anything that's deemed momentum, or if you're looking at like major trap setups, swing failures, for example. Because the large, obviously you want to have an idea for what is like abnormal volume so that you could start fading, because most of the market at that point is going to probably try to squeeze that. Or what we see a lot of the times is that large late market buyers and sellers don't often get rewarded. My AVAX short is looking good, thank you. Right now I'm just looking at Binance on the 3-minute chart. So lately I switch it up. So it depends on, one thing I talked about a while ago is I switch it up depending on just the overall speed of the market. So when the market's moving fast, when flow is strong, I'll look at a volume-based periodicity. So I'll look at like if it was on Bybit, it would be like a 5 million, a 10 million, a 15 million contract rotation size. Lately I've been using, and I've used trend reversal too. These things just clean up the noise, right? You're only seeing candles print where there's actual activity or change, right? If you're using a trend reversal candle. But lately I've just been using low time-based rotations. I mean, when you're using the non-time-based periodicities, you're still trying to kind of capture the time frame that you would normally look at. Like you look at a 1-minute chart, you're replicating that area almost by looking at like a very low volume-based periodicity or a very low, delta-based periodicity. Versus if you're trying to like capture more of a high time frame chart, instead of looking at like a half hour candlestick, you might look at like a 200 million volume rotation, right? You get what I'm saying? Oh, that noise is, hey, it's not working. She's got the cone on her head. She's trying to scratch through the cone. Jesus. So what was I saying? Oh, I've been looking at just like 3, 5, and 15-minute charts lately for footprints. I'm doing more of like intraday momentum and swing trading, so I'm not really. I like for some reason, somewhere along the lines, people thought that I trade for ticks, like I scalp for ticks. No, I have scalped for ticks before, right? In and out of trades if we're coming out of like a major liquidation, for example. There's a couple cases where I might be in and out of trades very quickly, but no, I'm an intraday. We'll call me a intraday swing trader, intraday momentum trader. I think that's the best way to put it. Anyway, so let's take a look at some other charts. BTC is pretty boring right now, honestly. But either way, I mean, you have this little range forming. So I'm just going to be playing the ranges, guys. So, I mean, if we're looking at how this is transpiring right now, value is developing lower right now. We're holding sort of that one standard deviation away from VWAP. We're back into what looks like kind of rotational behavior, though, right? So instead of immediate continuation off of VWAP, so like right here, and then leading to lower, or holding towards the, this is a 1 standard deviation and 2 standard deviation band from VWAP. So this is kind of like you're developing value. If the move is impulsive and is going to remain trending, a lot of times you're going to see that it remains within here and favors the low end of this structure. Whereas now we're immediately going towards being more rotational. And so what I just look to is to play the range at that point. So I'm not going to be really looking at the VWAP per se, but again, like I said, that double distribution setup is above 19.5. And just to clarify, that it's kind of obvious when you look at the chart, right? You have this gap from here to here. So anything above 19.5 probably moves pretty quickly through there. Yeah, let's take a look at GMT. I just haven't looked at GMT in a little while, so trying to get an idea of where some of the key levels are. There's our weekly profiles. I mean, this you could see that you could probably just put a monthly profile on it, get a better idea. That's the weekly up here. One sec. So zooming out real quick. So weekly at 53, weekly at 112. That's where we've had this inside structure now. For it's not an inside structure, but that's where our range has started to form. Monthly profiles, point of control, and that weekly level pretty close. So, I mean, I can't really see anything that I would really want to do with this unless we were actually breaking back above POCs and prior weekly, because then you have a breakout of those we have a breakout of our weekly range. Right now you're kind of dead in the weekly range, right? So this is going back to the beginning of June. So you have trending period, first period of bracketed weekly structure. At this point, high time frame wise, low or high, this is dead right in the middle, unless you're talking about trading this low time frame. I've only been trading so the first thing I do when someone asks me to check out an alt is like look at the high time frame, but most of my trading with alts has been the same way I've been trading BTC. So hold on one sec really quick, let me get this off. High time frame, you know where your weekly levels are right now. This kind of stands out though. So same thing with Solana, but they are showing weakness. So previous breakouts of structure like this, you've seen more impulsiveness off of the move. So you've seen less of this complete throwback to the level. So that's a little bit worrisome, right? If we throw on like a 200 on the daily, same thing with Solana also, holding that. But the more important feature is you're within a monthly range now, right? Weekly, it's not the profile makes it obvious it's not clean, but on a daily, why is that? Hold on. Why are my profiles not showing up? Oh, they're too light. Fuck. Prior naked point of control. That's nice. So finding support there. But I mean, you have a pretty clean trending move down right now. Break, impulse, imbalance, now ranging. I mean, I'd probably look at, I don't know if I would want to buy this right here, even though we have that naked POC right there and we're holding, you know, we're holding today's POC. I gotta put everything back on now because yeah, I mean, we're being rejected at VWAP, but I don't know. What are you thinking with this? You thinking a squeeze up, fill out this low volume area? I haven't been paying attention to any alts besides AVAX, Solana, and FXS, which is kind of like a moon bag. This kind of grind though is interesting, but it all depends on the rest of the market though. This kind of grind a lot of times I've seen where it just, you get that spring up out of here. Right? Clean trending move down. Rotational now. Grinding against VWAP. Weighted impossible, another short. Yeah. Yeah, I mean, I think with alts, like when it comes to shorting alts, like I said, it's just, and you saw some huge pumps recently. It's nothing though that compares to previous market cycles in terms of massive pumps, unless you're thinking like, Unify. But you'd really want to short alts as close as possible to like high time frame levels. So I don't know if I would want to short short something like this right here. Intraday though, it's kind of grinding against that VWAP. I've seen it before where you get something like this, and then the final move is like an ugly pop through. So low of day as your target. I mean, you probably have a poor low down there, right? Let's look at GMT on the, let's see, is this on here? No, it's not, is it? What was the other one? ARPA, let's see. What is this? Let me take these off real quick. What is ARPA? I'm just gonna put some things on that stand out. Nothing clean, right? I'm not like trying to make sure this is clean and lining up. I'm just looking at what is pretty obvious in terms of descending structure. So rejecting from a pretty obvious area of confluence. And not that I'm saying this line is the exact spot. That's why I said like I'm not connecting these perfectly. You're just kind of connecting the overall rate of change over time and how when it on average has started to decline. So if you're looking at something that has consistently made the same pattern of lower highs over time and after relatively the same amount of time passing, it's a decent measure. So your weekly and your daily low, rejecting off of that. So, if this was, so any kind, for one, I mean, there's no alts really right now that are really strong, right? Everything is macro right now. But strong structure would hold the highs of a prior range after a failed breakdown. So if you have this range, right, and this is your failed breakdown that absorbed, and then you have this under over, ideally what you should see is that the top side of this structure holds. So if this was flagging, you'd want to see that this level continues to act as support. So from a risk to reward standpoint, you could absolutely take a trade off that. But I mean, you've had multiple rotations at this level, and a rejection at a pretty obvious high time frame level. So the failure, a breakdown here covers this pretty quickly. And I don't know shit about ARPA, so I can't really say much. For our RSI divergence. Yeah, I mean, that's the divergence right here is not in favor, obviously, of bulls. That was a bearish divergence. right? So higher high, lower high, and RSI. This is why RSI is it's very useful. But you could already see, like, if you were just looking at this price action, and RSI has a 14 period look back on average, right? The average look back I think is either a 12 or 14, like generic out of the box. So this is where you're focusing. Period of sideways activity is going to reset the RSI. The next big move that's impulsive out of a period of sideways activity with no momentum is going to throw the RSI off. So you know right away that the big move is going to lead to a very large move in RSI. And if price action follows like this and yet it makes a higher high, you're always going to have a divergence. Always. It's just mathematically impossible for this to not be a divergence. So if you see this with the naked eye, you already know, like, well, momentum's drying up, right? But the RSI can be that sort of extra on top to help you, confirm the setup. But that was guaranteed to print a divergence, because what would have to happen for the divergence not to happen would be for this to start immediately moving up more than it did here. Solana. So I got out of my position that I added yesterday in Solana. So that's the position I was talking about when I said, does anyone want to know that what position I'm getting back into? So I shared the day before, or a couple days before, that I took profit on some. That was up here. That was like at the low, honestly. That was right up here. I was anticipating that we were going to get a retest of somewhere between this little flip and this descending line. So when we were kind of, when we got that bounce there and failed and then came slightly lower, and yesterday it was kind of just a matter of price action, how it looked. When we started showing a decent response down here, I started adding back to the position because I figured, what the hell, it's close enough to the line. But I've already got out of that position. I captured a really decent long already in Solana before taking profit, so I'm not trying to take more than I've been given. Binance looks stacked. Let's see. It looks kind of normal. Binance might be stacked. It might just be a bunch of like short volatility people playing the ping pongs between. Yeah, just like out of the internal spread market makers looking to play any kind of chop over the weekend. I don't think it necessarily looks like really stacked. TRX. I mean, as far as a high time frame chart goes, this is, it looks like it's holding up decently, right? Going back to 2019, this flip, this acting as support, good contextual level. What's the BTC chart looking like? Where's the BTC pair? That's annoying. There we go. Yeah, that's definitely strong. Wow. I haven't focused enough on that. So this is the only reason why, I'm sorry, I moved away from the microphone and people complain that they can't hear me enough. This is the only reason why you should be trading at all, if it's showing strength against BTC. So I don't know if we're at the tail end of that right now. But yeah, as far as this region being a good area to find risk, you're as close to, the support and resistance flip is not as close as you can get. But I mean, on a high time frame chart, it doesn't look bad, right? It actually looks strong. I mean, you can see it against BTC. It's kind of clear. Oh, you're in a long from 18,907. Nice, man. Yeah, we'll see. I mean, if you guys have any other questions, we'll take some more. Otherwise, we'll probably wrap it up. Kind of a boring stream. Not a whole lot. Going into a holiday weekend. No one's going to be trading tomorrow. End of the month flows, holiday weekend combined. You could just take the rest of the day off, honestly. It doesn't make sense to really... Why is my vet calling? She called yesterday already. Anyway. I think that'll probably be it, guys. We will wrap it up. Yeah, some streams are exciting, some are boring. This was definitely one of the more boring ones. But I figured I'd hop on because I hop on every Thursday. But again, as a reminder, next Tuesday, I'll post a time over the weekend and we'll do the spaces. And yeah, I don't have any thoughts on the halving. I kind of think that we behave like we did leading into previous halvings. I don't think the cycle changes too much in that respect. But we got a ways coming for that. James, and then I'll wrap it up. How do you personally mentally take losses? You have to begin to like to lose, because if you understand your system, it's going to sound silly, but you have to know that you're expected a certain amount of losses. So kind of, if you could get them out of the way early, that's like a way of looking at it, like the silver lining of it, right? But no, I mean, honestly, you have to get used to losing. You have to be able to take losses and cut them quickly. It's just part of trading. That's the thing that people have trouble with when they start trading, is they think that they have to like win every trade because they think that that's the most important measure of performance, and it's not even close. So it's just part of variance. There's nothing you could do about it. The better that you can be about taking losses, the better off you'll be as a trader. There's always another trade coming too. It's like I talk about batting and hitting singles, and you're never focusing on one single trade. You have to think about in aggregate all of your trading adding up. So if you're losing, cut the trade. If you're uncomfortable, cut the trade. Take the next one. So, but I'm gonna wrap it up, guys. Everyone have a fantastic weekend, holiday. I will see you guys on Tuesday for the stream and then the spaces. Until then, stay safe. If you're in the United States, don't blow your hands off with any fireworks.